Right, guys, this is just a short video clip quickly, just looking at task 10.8. Before we begin, what's important again, like I mentioned, when we deal with adjustments, is that you identify your two accounts involved and to know what type of accounts they are. Okay. In this adjustment for 10.8, we're busy dealing with depreciation. Depreciation, we know, is an expense. Okay, so we know it'll be a nominal account, and like all expenses, they will be debited. And we know what effect an expense has on the accounting equation. A is equal to O plus L. The second account involved is obviously where we need to bring this to your attention. Right? We know that depreciation is recording the expense on that depreciation of that particular vehicle or that equipment. Okay. We do not subtract from equipment or vehicles. So we do not credit vehicles or equipment. We need to create a new account called accumulated depreciation. That credit also doesn't get paid for physically out of bank. So you've got to understand the first concept, that the equal credit here for this adjustment is a new account called accumulated depreciation. This a new account, accumulated depreciation, is referred to as a contra asset. And by that we mean it offsets the value of the asset that is depreciating. And you'll find that it will be found in the balance sheets section of the trial balance. This accumulated depreciation, I sometimes refer to it as a negative asset, and that just helps you understand that it will always be on the credit side. It has a credit balance. Okay. So if we have a look at this exercise 10.8, you'll notice that where they're taking us is they're making us look at the year-end adjustments. So if you look at the counting cycle, we're looking in at year-end adjustments. That's where we are. When we look at that year-end procedure, the adjustment we're dealing with here is depreciation. So the question gives us a pre-adjustment trial balance. We're then given the adjustment to calculate the depreciation on vehicles and equipment. And then once we've gone through that process, you will see you need to record the adjustment in the general journal. And then from the general journal, you need to post that to the actual ledger accounts as well for depreciation and accumulated depreciation. So if we have a look at it, this question, a trial balance is given to us. Vehicles, the cost price of 420,000, and they tell us that the depreciation there is at 25%. And for equipment, 310,000, and they tell us that the depreciation amount is 10% per annum. They also tell us in the question that we need to use the fixed installment or that straight line method. So in the previous little video, that would be using method 1. So if we just look at pulling this adjustment on depreciation apart a little bit with the information they've given us, you will see vehicles and equipment amounts were given. They told us what the depreciation percentages were. We know that we need to record this in the general journal first, then the general ledger. We know the accounts involved are depreciation and accumulated depreciation. Okay, depreciation is increasing. The accumulated depreciation account is also increasing. We know that depreciation is an expense. We know that accumulated depreciation is a contra asset account. So it's found in the balance sheet section and it has a credit balance. Right. And then, of course, once those adjustments are done, you will then have a post-adjustment trial balance. The calculations for depreciation in this question were quite simple. There were no opening balances. So it is just straight taking that original cost for vehicles and equipment and timing it by the percentages there. In recording this, it will be recorded in the general journal first. The first account is the account that's being debited, depreciation, and then you'll see we separate the next accumulated amount separately there for vehicles and equipment. The general narration, you can see they've just written down information of what the percentages were. In posting to the general ledger, we know that vehicles and equipment is debited, those two assets. Okay, you'll see there's no credits here, guys. The actual vehicles and equipment account are not credited yet by that accumulated depreciation amounts. And then you'll see the actual depreciation expense accounts are recorded there as two separate amounts for vehicles and equipment, and there must be an equal credit, okay, with a double entry principle applying, and those equal credits you find in this new account called the contra asset account, accumulated depreciation on vehicles and accumulated depreciation on equipment. Notice what they write as details here. Okay. In the cumulative depreciation of vehicles, it's depreciation. Same thing on equipment, depreciation. Okay. If you look at the actual depreciation account, you can see that those details there is where that corresponding credit is. Okay, so hopefully that gives you guys a good explanation of how to record it. Right. We then look at the accounting equation, the effect on the actual accounting equation. You can see there depreciation, the expense has got bigger, but it's got a negative effect on owner's equity. So that depreciation expense increasing is shown as minus 136,000 under owner's equity. And then we've got that contra asset account, which is being credited by 136,000 under assets, shown as a minus. Okay, guys, I'm hoping that will give you a nice quick explanation of 10.8, and then we'll move on and look at the next two tasks.